happened to the Philippine economy in 2021? Well, we grew by 5.6%. That is a turnaround from the 9.6% contraction that we recorded in 2020. Of course, it's a record decline. And for 2022, the forecast is that the Philippine economy will grow between 7 to 9%. The Philippines is, of course, a household-driven economy, and an economic indicator that has been fueling personal consumption is the money sent in by OFW. So a tenth of our economy still relies on remittances, and the Philippines is the fourth largest recipient of remittances. But because of this increasing demand, one factor that we really need to watch out for is the increase in inflation, especially when demand starts to rebound. This is our slide on land values. As you can see, land values are starting to increase in Metro Manila. So the appetite for land banking, for the acquisition of parcels of land across the capital region is starting to improve. And that is, of course, a positive indicator for a property development, meaning a lot of developers are now really aggressive in terms of land banking and planning their pipeline of the next few years. So let me now shift to residential market. Speaking of land banking, of course, this has allowed developers to launch more projects. In fact, in 2021, we saw more than double increase in terms of completion of new condominium units across the capital region. Developers continue to line up. They continue to launch new projects across the capital region. Well, not just in Metro Manila, but even outside of Metro Manila, we see a lot of horizontal house and lot only projects being launched and completed. Now, for the Metro Manila condominium market, we're likely to see a recovery in terms of leasing. And as Dom mentioned earlier, the office market is likely to see a rebound. And that should also signal a positive indicator, positive trend for the residential market. More will be leasing, more will be buying condominium units. And that should result in an eventual recovery of prices and rents across Metro Manila. 142,000 condominium units. That's the condominium stock as of end of 2021. So that, of course, is an improvement from 140,000 units that we recorded in 2020. It's a marginal increase, though, given that over the past few years, there has been a substantial addition annually to Metro Manila's condominium stock. Again, the Bay Area has overtaken Makati CBD in terms of share to total condo stock. But again, leading Metro Manila is Fort Bonifacio. And speaking of Fort Bonifacio, along with the Bay Area, they dominated the completion of new condominium units in 2021. So a split between these two business districts of Bay Area, 86%, and then the remaining 14% share covered by Fort Bonifacio. So 8,700 new units completed in 2021 from about 3,300 that we saw being delivered in 2020. Now for 2022, again, no surprise here, Bay Area and Fort Bonifacio will again dominate. But we have other business districts such as Rockwell, Makati, Alabang that will also chip in to the new supply. And overall, these business districts should contribute to an additional 10,400 new condominium units in 2022. So we're seeing a healthy supply pipeline from 2022 up to 2024. Of course, we have the likes of Bay Area, Fort Bonifacio, again, completing a substantial number of residential units during the period. So from 2024, there will be a 70% increase in Metro Manila's condominium stock compared to the stock that we recorded as of end of 2021, which is about 142,000 units. And the vacancy is still increasing, but in some submarkets, this is starting to ease or slow down. And of course, Bay Area, Fort Bonifacio, we're still seeing some spikes in the vacancy, but the pace of increase is starting to decelerate, and that is a good news for the condominium market. By 2022, we're likely to see vacancy declining to 16.2% from a high of 17.9% that we recorded in 2021. Again, one of the major reasons behind the increase in vacancy is less local professionals and foreign employees that are buying or leasing out condominium units in major business districts across Metro Manila. And in 2023, we're likely to see that increasing again, mainly because of the addition of new condominium units. So the rents are likely to recover starting 2022, especially the latter half of the year. We're projecting a 2% increase, which is a slower increase compared to what we recorded, especially during the height of POGO demand in Metro Manila. But that is an increase nonetheless. So that is a positive indicator for the condominium market. The prices of condominiums are likely to increase starting 2022. Again, that's a 1.8% average increase. Of course, we saw 2020 a decline of about 13%, and then 2021, that's another 16.5%. So in 2 years, we saw Metro Manila average condominium prices in the secondary market declining by about 20%. So, but in 2022 up to 2024, we're likely to see an improvement in terms of pricing. The launches in Metro Manila reached a record high in 2021. Again, another positive news for this condominium market. That's 196,000 new launches for 2021. So even with the pandemic causing disruption across the capital region, this is still a very positive news for the market. Developers continue to launch new projects, line up new condominium units, of course, preparing for the eventual recovery in demand and the pent-up demand, as we always say. So even the pricing of recently launched the condominium projects, especially those in fringes outside of the major business districts, are still increasing. So again, another positive indicator for the property market. Because you can see here, overall Metro Manila average pricing still increase. So that is again a very good indicator for the residential market for the newly launched condominium projects. Now, speaking of launches, we saw a slowdown in 2021. That's only about 27,000 condo units being launched. And as a result, also take up or the number of units bought in the pre-selling market dropped to only 12,000 units. Looking at 2016, 2017, 2018 was a peak period where we saw 57,000 condominium units being sold in the pre-selling market. So 2021, that is a significant drop from what we saw. Of course, 2018, that is positively and heavily influenced by the POGO demand. So this demand was complemented by the take-up or absorption of more office space. And as you know, the POGOs have already left the Philippines and they transferred to other Asian countries. And this has also affected the take-up of condominium units in Metro Manila. But what has been offsetting that decline in the vertical or condominium market in Metro Manila is the improvement in the take-up or purchase of horizontal house and lot only projects outside of Metro Manila. There has been a decline in 2021. That's a negative 14%, but that is not as deep compared to the contraction that we recorded for the vertical or condominium market in Metro Manila. So what we can conclude here is that a lot of investors are shifting to suburbia. They have been looking at residential units outside of Metro Manila, looking for horizontal developments in the provinces. You have the likes of Pampanga, Laguna, Cavite, Batangas, which of course remain very popular sites or investment destinations for a lot of property buyers. And again, what has been supporting this shift to suburbia is the strong take-up of these house and lot only projects. Of course, a part of this demand is driven by the Filipinos working abroad, as take-up here is driven by a mix of end use as well as investors that have really been trying to maximize and seize these competitively priced horizontal developments outside of Metro Manila. So just look at the take-up of these horizontal developments ranging from 89 to 97%. So almost sold out by end of 2021. So again, these are very positive indicators for the horizontal market, somehow filling the void that we saw for the vertical market in Metro Manila. This is another interesting survey of the Philippine Central Bank saying that for the fourth quarter of 2021, there is an increase in the number of households that plan to buy properties over the next 12 months. And hopefully this materializes towards the end of 2022, but bulk of investors are still looking at the single detached residential unit. So this again supports the data that we have gathered, where there's a strong take-up of horizontal projects in Cavite, Laguna, Batangas, Pampanga, Northern and Southern Luzon. If you remember, we asked you this question a few presentations ago. And of course, the top destination is Laguna, followed by Batangas, Cavite, Pampanga, and Bulacan. Now, speaking of the residential market, these are just a few of things that we need to watch out for. The movement in interest rates, which of course are likely to increase, especially as demand is starting to pick up more expansions outside of Metro Manila, more house and lot only projects being launched, and of course the growing demand for horizontal projects, which developers have been tapping. And they've been maximizing also the proximity to infrastructure projects of these residential developments. So the usual residential market recovery enablers, so you have a steady demand for horizontal projects, of course the increasing vaccination rates, consumer and business confidence are improving, remittances likely to grow 4% for 2022. Again, this is a very strong growth. Historically, remittances would grow by between 4 to 6%. And again, what will anchor the recovery in appetite for residential units is the projected economic recovery of the Philippines. And in 2022, the Philippines is likely to grow by between 7 to 9%. Now we have here some recommendations for developers. Some of these recommendations are the usual implementation of sustainable promos and payment schemes, highlighting health and safety protocols. But I think what stands out is the gradual reopening of showrooms, especially now that the restrictions are starting to ease, lockdown, mobility control are starting to open. So I think this is a very good sign for developers, just to be able to show investors and buyers, the projects and the configurations of their development. So for tenants and investors, constantly monitor mortgage rates, take advantage of the promos and discounts being offered by developers, and as we always highlight, maximize the proximity to infrastructure. And there are several projects that will be completed 2022, even beyond this administration. You have MRT7, the subway, the Bulacan airport. So all these projects, of course, should closely be monitored, and you should look for projects that are near these public infrastructure projects. So before we move to the next sector, let's have a residential poll break first. So the first question is, which of the following locations will you choose for your house and lot only investment? So again, the northern and southern Luzon options: Bulacan, Pampanga, Laguna, Cavite, and Batangas. So let's see which location top the list. It's Laguna, again, 42%, similar to our survey a few quarters back. Let's look at the next survey question. What will be your next residential investment? So will it be a condominium unit in major business districts, a lot only in the province, or house and lot unit in north or southern Luzon, or will it be a beachfront property or a leisure-oriented property? So let's check your respondents. What will be the top residential investment option, perhaps over the next 12 to 24 months? So let's see which of the options top the list. Well, it's a lot only province, lot only project in the province. I remember a few quarters ago,